Today's video is all about IONET. The internet of GPUs is finally here. The power of global GPU resources with a single click. Today's video, we're going to be doing a deep dive into this project, looking at the tokenomics, the partnerships, the team, the overall community, and the overall value proposition, figuring out whether this project has what it takes to make it to our portfolio. So you know what? Let's talk about the news. Let's analyze the charts and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. And the question is IONET an opportunity? Guys, of course, we're going to be doing a deep dive today. We're going to look into some of the details. We're going to look into the tokenomics, partnerships, the teams, and to see whether the community is bullish or not, and is there momentum happening, and is the team doing what it has to do with regards to its roadmap. And overall value proposition is very, very important. As we see the market struggling to maintain its bottoms, these are great opportunities to be scoping into some of these projects that are young, that have a great value opportunity, and ultimately being able to scale in at these bottoms is at the end of the day an opportunity in itself, in order for us to build a portfolio at the bottom. So this is what we're going to be looking at. Of course, here on the channel, we do deep dives every Sunday. I do release a deep dive looking into many projects, and if you want to chime into it and basically vote on the next deep dive, join the Discord. In the Discord, I do have a channel where we can people can vote on the next deep dive that I do release every Sunday, as I mentioned. All right, guys, let's move on. Let's see what's going on here. We're going to be using the website as the main platform to navigate the project. Okay, so I usually do that because the reality is that a website is the main interface to do research. And if the team is doing a great job giving us all the documentation, all the information we need to get fundamentally bullish, particularly from a retail investor perspective, guys, that's great. That's exactly what they need. They don't want any friction. The team doesn't want any friction from the retail investor to become mass adopted. We want mass adoption for these projects. We want to make it frictionless. We want to provide all the information, all the details, so again we can get fundamentally bullish. Okay, so let's begin. Let's see what's going on here. The intro is pretty good here. The landing page is really good. We got decent amount of graphics, nothing overwhelming and distracting. The sentences here: the internet of GPUs is finally here, and of course the GPU resources with a single click. We can kind of make sense of it, that it is a DePIN project, guys. It is a DePIN. If you have a GPU, if there's GPU resources available, wouldn't it be nice to offer those up to the market, to a marketplace where individuals can use that GPU or the GPU resources available in order to, use it and provide rewards to those individuals that are willing to share. Let's put it that way, to share it on a decentralized network. So basically speaking, this is what's good, is that, with a single sentence, we can get an idea of what it's all about. If we continue going down, there's a lot of info, a lot of little infographics, screenshots, and so on. So let's try to make sense of all of this. Decentralized clusters deploy on a decentralized physical infrastructure network, which is of course the DePIN concept. Basically a frictionless cluster deployment for ML workloads. Okay, learning models, or this is actually of course something that's a big part of the DePIN narrative. What else do we have here? We have a bit of code here. I'm not sure what that is. Out of the box deployment. What else do we have? Instant payment on Solana. So it is built on the Solana network. And of course, this is something that a lot of us are considering when we look at Solana and we compare it to other layer ones, of course, like Ethereum and BNB and many others. We talk about transaction fees. We talk about the speed, of course, and Solana at the current moment is definitely leading the way. And what I've noticed in the last little while is there are projects other than meme coins being deployed on Solana. We saw Render make a transition into the Solana network. Now Render is part of the Solana ecosystem, and of course we have IONET, part of the Solana ecosystem. And definitely when you look at Render and you look at IO.net, they're very similar in concept, right? It's just that of course Render has got a large market cap and it's been doing very well, and of course IONET is new and it's coming up and is doing its thing, right? So we could definitely see some interesting plays here on the Solana network, given that it's offering a lot lot of value with regards to speed and low transaction fees. So definitely pretty good. Let's see what we got here. On demand GPU access. So basically instant and permissionless access to the internet of GPUs with industry breaking prices. So interesting stuff here is that you can see that they have GPUs processing power available on demand. Okay, and these are the type of devices, or this is the type of hardware that they make available. Now, if you want to be a participant of the network and you want to provide your resources, if you own a GPU that you want to provide to the network and provide the processing power to the network, they are very strict, and of course to maintain that quality. So you have to qualify. Your GPU has to qualify in order to be part of it, and that of course is to maintain quality and maintain, you know, the actual strength of the network in itself. The overall value proposition is that we provide, or the GPU can provide good processing power, and this is why they want to maintain a high standard. Better, of course, better, faster, and cheaper industry breaking prices. This is a common factor across the market. You know, obviously, if you know, anything built on Solana generally has a cheaper fees and so on. And generally speaking, guys, when you're talking about DePIN, obviously, in compared to a centralized network, there are issues. Of course, there are issues. If you're in a centralized scenario, the argument is through economies of scale, you can provide cheaper as well. But in the last little while, we've been noticing that the efficiency of these projects on the blockchain and decentralized DePIN, you know, infrastructures are providing equally, you know, great opportunities for better, faster, and cheaper. So this is something that we got to consider. What else do we have here? More GPUs than major competitors, 100 times more. This is where it's like, you know, I see a bit of a competition here with a lot of other DePIN narratives. Guys, I've been doing deep dives on DePINs, on AI projects that couple up with DePINs and so on and so forth. And they all say that they have more than the other. And, you know, this is one of the things that we have to understand, is that the more they kind of compete on this front, the more we neutralize them and say, you know what, that's not a relevant factor anymore, because really it's the throughput that matters the most. You know, put your money where your mouth is, and let's see exactly how you can compete with actual numbers. Not saying 100x is not enough. Now, to say, you know, that it can compete with Render, even though Render's a part of the team, a part of the network in itself, and so is, you know, they have a bit of a relationship, a partnership happening here. We'll talk about that in a second. More GPUs than major competitors. This is something that I want to see more in action. Money-making machine, of course, global GPU access. We provide GPU accessing worldwide across 138 countries, best in its class chip. So again, they're very, very strict on the type of GPUs that can be offered to become part of the DePIN network. Sustainable yet powerful, ultra security and all that. Now, the partners. Okay, this is where things get a little bit, you know, hectic for myself, because you guys know that I'm very critical on these logos that are on websites. And every week when I do these deep dives, I start to say, guys, how are they actual, you know, partners with Filecoin, partners with Render, borderline competitor, right, with Render, of course. And then Solana, is that possible in the sense that, you know, they're deployed on Solana? So what's the extent of the relationship? Like, how is it a partner? You know, just because you're deployed on their network doesn't mean that you're a partner. So we got to, you know, kind of look into this. And Aptos as well. How is a different layer one altogether part of the, you know, into a partnership? I'm not sure exactly how this is working out. Then we have, you know, Aether also a DePIN infrastructure scenario, very, very young. How are they working together? Now that could be a case where they are working together, and even with Render, where, you know, Render's providing GPU processing power as well. And if, you know, there's a relationship here, you know, that basically these two, you know, other decentralized processing power type of projects could kind of work together, that would be ideal, sharing the processing power across the board. Now, I believe that's the case, guys. I believe that's the case. Wouldn't it be nice to be able to click on some of these logos and be able to get into a blog post where we can learn more about their relationships? And that's what I stress to a lot of these team members, is that, you know, get a Medium account at best, you know, or even another blog section on the website where, you know, someone is actually communicating to people that are doing research exactly what are these relationships about. Are they strategic partnerships or are they venture capitalists? And this is where I lead into my next statement, is that I feel like we need to look into the Solana relationship and the Aptos relationship a little bit more. The Filecoin relationship is very clear. So I was able to find a blog post on this. And of course, I was trying my best to get a hold of the team to get some clear answers. And the reality is I wasn't able to get any clear, real answers about some of the relationships. They just directed me to the X, to X, and search through X, and that was about it. And to be honest, that's not a good look, right? We need to have this information readily available. And the fact that I need to go to a third-party blog to rely on, to get some information, even that is not good enough, okay? So we need something official to actually formalize those partnerships if they want to be considered strategic, valuable partnerships, okay? I know it's a lot of work for a communications manager or marketing or whatever it is, whoever's in charge of it, to do it. I get it, but that's what's going to bring value and set them apart from all the other players out there that are not taking the time to communicate. Communication is very important here, especially if you want to communicate a message of quality, sustainability, and ultimately all that provides is a scenario of risk-free, right? You kind of give a peace of mind to those investors that want to get in and start adopting the technology. All right, so you can see that they do have a little bit of a collaboration here with Filecoin. It's not necessarily a DPIN in the sense that they provide GPU, but it's a DPIN in the sense that they're one of the OGs in the space providing storage, right? So we know Filecoin very well here on the channel. I talked about Filecoin significantly. So the fact that they do have Filecoin as a partner is really interesting, but you can see that they're slowly transitioning into the fact that, from machine learning, you can see that they're going to need to expand their, applications and ultimately going to need perhaps to say Filecoin get into some GPU concepts, right? So that they can, work together. And obviously, from a storage perspective, they could work together and provide some of those resources as well. So feel free to check this out. I think regardless, even from a broad perspective, it's great to see another DeepIn project working together officially, and it is fairly official that Render is also doing a very similar thing. It's just that they provide GPU processing. Now, the partnership that really kind of keeps me, thinking is the Aether, because I would say that they're pretty much equal to one another in the sense of size, right? Like, Aether's coming up, they're small, they got a lot to work to do, and so does IONET, as can be seen. The market cap is fairly small, and they're starting to, try to compete with the heavyweights. And I appreciate that. I do appreciate that. So this relationship, in my opinion, is almost at a equal leveling field. And the field is nice and level. And that means that they could work together very sustainably. So I appreciate that. So a little bit more information, guys. That's what I would like to see. I wouldn't mind reading a bit more of the details on the relationships and on what they're building together. Put your GPU to work and accelerate your earnings. Okay, so again, connect your and monitor earn on your worker. So we're going to talk about what a worker is. You can see that it's a trademark. It's part of their ecosystem. So they got workers. Connect multitude of services, earning with Solana. So you're going to be able to earn on chain, and then skyrocketing profits on your infrastructure. So you can provide, again, your GPU, your hardware to work. And then you have your Explorer. Sorry, guys, Explorer. Every network needs a great Explorer. So you can use the Soul Scan, of course, and anything that's related to Solana, but they have their own Explorer to kind of get them to get you the details that you need with regards to the processing side of things. And of course, there's documentation for all of this, and we'll talk about that in a second. And then you have the ventures, IQ propelling ML startups. So disrupted venture capital investing. This is what kind of interests me as well. Like, what is exactly happening here? I don't get much documentation, but the world's first venture capital founder-friendly firm focused on compute power. So what do they mean by this? Driving innovation in AI and machine learning, GPU compute power access. So are they giving these resources to up-and-coming, let's say, projects and so on. So I think this is fairly new. I don't see much documentation about this. And then here we are, be a part of the nation, the Discord. Guys, I was on the Discord for a few days. I tried my best to communicate. I'll be honest, the top moderators are very helpful, very, very helpful. But I did try to reach out to the team, many, many members of the team, and I got a one-word answer, very quick response, and really it would have been nice to maybe get some clear answers from the team. And there should be a marketing manager up in front, communicating on the Discord. The Discord needs that leadership, particularly with individuals like myself that are going there and asking critical questions and want clarity and reassurance before we make videos like this. So, they're going to rely on their website to relay the information accurately. Let's see how well it does. All right, so let's move on. At the bottom here, we have the About Us. We can open that. About Us. Let's see. Open up a new tab. Team and investors. Let's see what we got there. Frequently asked questions. You can go through that on your own. And maybe we can open it up and see what they got there. Anything useful. Media kit, not necessary. And then all of this is different resources with regarding to their projects, their ecosystem in itself. So it's an internal ecosystem. Usually when I refer to ecosystem, I refer to third-party projects that are built on a layer one. This is not the case. It's not a layer one. So what we're relying on is what value proposition do they offer based on the applications that they have, right? And there's a few. So you can see Cloud, Worker, and Explorer are their main. And then you have the About Us team, Media Kit, and Contact Us, and the docs. So we'll click this and see what we get. And you can see this is the white paper. This is the technical launch pad or the landing pad for their white papers. And they have documentation for all of them. And it gets a little overwhelming, I'll admit. If you want to know a little bit more, feel free. This deep dive would take hours if we went in through all of this. But you can see that they have the cloud, which is accessing decentralized GPU clusters on demand via IO workers, eliminating the need for costly hardware and infrastructure. So if you are an individual that needs cloud computing or GPU resources, you can use the cloud infrastructure to basically access decentralized clusters of processing. Interesting stuff. This is the end consumer, let's say, use case. The Worker, put the power into your hands with basically their easy to use one-stop interface for all their CPU and GPU worker setups. So in this case, you can set up your GPU and CPU to provide to the network as long as it qualifies. So pretty good, and allowed to earn and get rewarded for all of that, and contributing processing to the ecosystem, to the network itself. The Explorer, we talked about that, being able to curious about your network, how it works, include metrics, rewards, and all the little details that you need is right into one Explorer. And then the ID, it's a place where you can track earnings and expenses. ID is a central hub where you can easily see what's been added to your balance and how to withdraw in cryptocurrency. So a bit of a similarity here, I would say, between Explorer and ID, but I can see that this is just a bottom line type of thing. And then the IOG, I'll be honest, between the IOG and the cloud, things kind of get a little bit confusing, I think. But IOG network is a decentralized physical infrastructure network of independently operated, geo-distributed hardware nodes that provide permissionless access to an on-demand compute. So you basically, if you want some on-demand computing in a decentralized physical infrastructure deep in itself, this is where it's at. This is where it's at, the IOG. So feel free to read the documentation and exactly how this works, because really you're able to access decentralized GPU as well, and also the network is a decentralized physical infrastructure network, and this is where you're going to get the information about both type of ecosystem offerings, let's say, so to speak. Okay, so that's that. What I like the most out of all their documentation, and guys, excuse me for kind of jumping around a few tabs here because I think it's very viable, is this. This is for me the white paper that everybody could kind of want to land on. The reason why is because it kind of summarizes everything, and it gets into the tokenomics. It gets into things that are less techy but more also well-rounded as far as the project goes. We want to know about tokenomics and token allocation. We want to know about different staking and the emissions and so on, and the overall architecture, and so on. So we want to know a little bit about this, and this is what this page does. It does a great job at it. So their platform, if you kind of look into here, let me see if I can zoom in just a little bit for you guys so we can see this a bit better. Let me kind of zoom in just a little bit right here. Okay, so their platform allows for distributed AI and Python applications on a vast GPU grid. Okay, so on this grid, you have a GPU infrastructure. We know that's DeepIn and so on. And I'm not going to get into too much details, but they created a fork of Ray, which is at this point their whole operation, basically the node operation, a better operation with decentralized network. Okay, I want to get to the point of all of this. IOG introduces backend customization. So this is where the cloud is very easy, very straightforward, maybe meant for mass adoption. And when you're talking about the IOG, it's more of a back end. And this is where you can get specialized, more detailed, hands-on, let's say, access to some of the customized characteristics, right? So this is interesting, of course, if that's, it's something that you want. It definitely offers that advanced user approach. Let's simplifies the distribution of AI application through direct interface. Okay, and you can see confidential computing and zero knowledge jobs to AI. So there's a bit of a security here of that zero knowledge proof, or in their words, and zero knowledge jobs AI model. So just because the jobs are on the network doesn't mean that everybody's going to know what kind of jobs you are actually doing, which is obviously we want that privacy. Turning up the clusters to scale up thousands of GPUs, all of that great stuff. So you can read in general what it's all about. Now the IOG infrastructure, this is interesting, of course. So what we talk about is we're talking about clusters. Okay, and clusters are important because it's the main architecture of their ecosystem. Hosted on IO Cloud, functions akin to regular Ray clusters with IOG specific modifications. So it's almost like IOG is like a fork of Ray, where they were able to modify, some little characteristics, right? As I mentioned before, comprising a head node. Okay, so you have to have a head node and multiple worker nodes, obviously kind of below it, right? So the head node orchestrates the workloads amongst these nodes. So again, the head node is almost like the orchestrator and makes sure the worker nodes are behaving correctly. Currently, the head nodes poses a single point of failure. So what I'm getting from this is that the head node at this current point, if it does fail, there's going to be an issue. If it becomes inaccessible, the entire clusters follow suit. So that means all the workers stop working. However, in the event of a worker node failure, the head node marks them as inaccessible because again, it's like considered management of this little cluster, and with proper retry logic can reschedule workload computations on healthy nodes, and then giving us or the cluster provider, the worker provider, the opportunity to reconfigure and redeploy and do what you got to do to get things happening. To address a single point of failure issue, the head nodes of the current cluster booked on IONet will be distributed across several secure partner data central facilities. So they're distributing or decentralizing the head node, which obviously provides a sense of security in that case. So that's interesting, of course. There's structures as such where there's a head that makes the decisions and kind of organizes the workers. But then if the head goes bad, in this case, they're trying to do a complete preventative measure by decentralizing it. Okay, so interesting stuff. And you can see there's more details here, of course, and there's some, coding here to get, if you want to get very, very technical about the rays and all that, the IOG auto scaling and that kind of stuff, the interacting with the cluster. There's a lot happening with VS Code and RAID jobs and APIs. There's APIs available. So this is where we get a little bit technical. And for the most part, retail investors, this is where we get lost because you kind of need a bit of a computer science background to really, really understand what's happening here. But feel free to get into that detail. I think for this deep dive purpose, we kind of did okay here. So the IO Foundation, this is where a lot of us kind of want to spend some time. Okay, these last three headings, or not three, one, two, a few headings here. They're the most important here as far as giving us information about the token itself. So we can see that the coin, they refer to it as a coin where it's built on Solana. So I would say should be considered a token, unless they plan on coming up with their own blockchain and they're front running it. I'm not sure about the language here. Usually if a project is built on the layer 1, it's considered a token. So I'm not sure. The Altcoin is a native coin of the IOG network. Altcoin is referred to IO. Fair enough. Okay. So what happens here? The ecosystem relies on GPU renters. Okay. So people to actually rent the GPU processing, and then the GPU owners, the people that actually provide the GPUs to provide the processing, and then the IO coin holders, people that want to hold the coin itself. Maybe they stake it, maybe they just hold it for long-term investment or whatever they're doing. So that's pretty much where we're at. This is what the IO token facilitates. But this is not just the utility. There's a lot more, okay? Because you can make payments with the IO as well, and of course, if you start looking at the fees, because this project could start earning very, very soon, becoming a very profitable project. And what I noticed is a lot of young projects, they come up with grand ideas, but they have no way to monetize their idea, which becomes very difficult, because really you have no burning options if there's no fees or any ability to earn. And as tokens get released into the market, the reality is you're diluting instead of bringing tokens back in to avoid dilution. All you're doing is printing more money as the project keeps on growing, fine. But if there's no revenue, there's no income, that means at the end of the day, all you're relying on is token unlocks to enter the market, and it dilutes the price. Well, in this case, we have a very strong use case with a very strong ability to earn for the actual project itself, not just the rewards for GPU providers. So this is very interesting. So user fees, payments made in USDC, are subject to a 2% facilitation fee. Okay, so if you use IO, increasing utility of the coin or the token, you can see that there are no fees. Very, very interesting. Now, suppliers provide, incentivize. So they incentivize payments in IO to reduce the fees. And that's very typical, guys, to get those rewards in IO and all of that. This is very typical. Supplier rewards, you can see emission rewards incur no fees, higher compute jobs and earnings. So if you want to earn in USDC, you're going to pay a fee. If you want to earn an IO, keeping the liquidity within the ecosystem, guys, no fees. So you're going to get rewarded from that aspect. Network security, collateralization. In this case, if you want to stake, so to secure the network integrity, there's a minimum amount of certain amount, there's no clear details of IO collateral that must be staked in order for the node to receive idle rewards from the network. So if you want to stake on the node, just to make idle rewards, passive income, there's a minimum amount. Again, it's based on the overall health of the network, or I read some of the integrity. Where is it? Minimum amount of collateral must be staked. There's no real clarity as to how much that would be. I think it's a calculation based on conditions. So again, we would have to check into that a little bit more detail. We can see holders can stake an additional amount of collateral up to a maximum staker per node in order to earn rewards in a return for securing the integrity of the network. So above and beyond the initial collateral, you can earn even more. So you can see that there's staking options for the token, and there's rewarding if you use the token in many ways. So I kind of like this. Now, what I would have loved to see is to see a DAO, some sort of governance utility for the token. And that means that, we do have to look at tokenomics and token allocation, because when you look at the token allocation, which we'll do in a second, there are some tokens that are up for grabs. And what I mean by that is decision making. Who is going to make the decisions about some of these tokens that are going to be entering circulation? And without a DAO, we can clearly say it's going to be the team. And when we start saying that the team is going to have strength over some tokens, then we decrease decentralization to a degree, right? Decentralization, centralization here in the crypto space is on a continuum. And when we want to enhance decentralization, and especially when there's tokens that are not completely fair launched, hear me out, because we'll get into this in a second. We want a DAO to kind of like make sure that there's some fair aspect to the distribution and to the decision making. So I went on the Discord, try to ask about if that's a possibility, or if there's anything that they can chime in on with regards to the decentralization of the organization itself, and obviously no response. So this is where I'm at. We're gonna have to take it with a grain of salt right now with what they have available to us, and this was updated about a month ago, so it's not too old, but with a young project, trying to crank out new updates all the time, I think it might be a little outdated regardless. But again, a communications manager trying to keep everything up to date and communicate on the Discord and on the social channels would be very viable. Okay, so tokenomics, interesting concepts for sure. And we'll do a summary later on because I know there's a bit of information overload, but fixed amount, 800 million tokens. Perfect. Hourly rewards to suppliers and their stakers. So there's rewards going to be issued, and it's going to be hourly. And there's a burn mechanism. Okay, so this is very important. There's a fixed amount. We talked about this again. So again, more repetition. 500 million coins will be distributed when it launches. So it launched, and because they call it a coin, I'm confused. Like, are we on the same page here? Is it going to be a mainnet launch, or is it going to stick on Solana? I'm not sure what's going on here, but regardless, 500 millions are in circulation currently because it seems to be launched to me. 300 million remaining coins will be emitted and paid to suppliers of the GPUs. Let's make that clear, and their stakers as rewards. This occurs every hour. Okay, so this is interesting because we're gonna have to see some token unlocks. We're gonna have to see obviously the restrictions and so on that are being put so that we don't see dilution in price as the tokens hit the market. Hourly rewards, you can see that over time it kind of diminishes, and it's going to take a good amount of time for the tokens to actually hit the market. It's going to take 20 years. Okay, rewards are released to suppliers and their stakers hourly for 20 years. So the 300 million tokens are going to take 20 years to actually hit the market. Rewards follow a deflationary model starting at 8%, and as time passes, it's going to reduce to about 1% until pretty much it reaches its cap at about 800 million, where it reduces significantly after that because there's a limited supply or a max supply of 800 million. So eventually, as it reaches that level, you'll see after 20 years, the inflation rate is basically going to come down significantly. Okay, so this is what we kind of want to see, and that's given to us based on the fact that there is a max supply. However, guys, don't forget there's a burning mechanism, right? So that burning mechanism basically suggests that tokens will be burned as the fees incur. So yeah, we'll get into that in a second. As you can see, there's a burning mechanism scenario, and you can see the yearly inflation rate is slowly diminishes over time, and so on and so forth. 2044 is when we should see the majority of the inflation. This looks very similar to tokenomics like Bitcoin, for example, right? We know there's 21 million tokens, and then after that, it kind of diminishes, right? So this is what we have to understand. Over time, it slowly gets reduced. Burning mechanism, using programmatic coin burn system, where revenues generated by IO.net from the IOG network are used to purchase and burn. Okay, so this is almost like a mechanism adjusts the amount of IO to be burned based on the IO's price. So it's almost algorithmic in a sense. There's conditions to be met in order to figure out how many tokens are going to be burnt. And of course, they should have that documentation and a lot more detail, the mathematics behind it, how they're going to actually calculate the burning rate over time. This reduces the outstanding supply of the coin and creates deflationary pressure. And this is what we want. I know this is a buzz thing right now. A lot of us know that the inflation in general is not a healthy thing when we talk about economics. So having the word deflationary, burning mechanism, is definitely something that will catch the retail investor's eye. So I'm glad that's there, and I'm glad that it's upfront. And in fact, it has its own little section here that's bullish. It's necessary for the retail investor. So I think that's a great decision. General revenue by charging fees for both users and suppliers. So the tons of fees, and these fees and will definitely depend the payment method and so on and so forth. They'll definitely have that burning mechanism. Renters fees and payment fees. You can see the 2% again. Reservations. There's a fee for payments, and if you want to reserve some of the processing power, there's a 0.25% fee. So there's a lot of opportunity to earn here for themselves as a project, which is healthy and necessary, but also for people that want to get involved. Okay, so that's healthy, and I appreciate that. Coin allocation. This is where we can get into a little bit more detail. The initial supply, 500 million tokens, were basically distributed at Genesis, split across 5 categories: seed investors, okay, seed A investors, core contributors, and then R&D, ecosystem, and community. So we're gonna go into this in a bit more detail because you know how I usually couple, some of these up together because they're early stakeholders, and early stakeholders have a different mindset. A lot of them should and do. Okay, so we got to have that mindset as well. We got to put ourselves in their shoes. This supply increases to 800 million over the next 20 years, as again we see the token get emitted, and there's growth in the network, and the rewards are justified. So the unlocks and rewards. So there's some definitions here: circulating supply, lock supply, available supply, max supply. Feel free to read that. But what's interesting is this graph right here, because really what this graph is saying is that over time, there's going to be a scenario where we're going to see tokens get released. And right around this level is where, and again, this chart, in my opinion, needs unit of measurement. I'm assuming that this is months. I'm assuming, but of course, assumptions is ambiguity. They should put the months, and that's that. And I'm assuming this is, of course, dollars. So, that's obviously, but it would be nice to make this very, very formal and professional, right? Put the unit of measurements. But nonetheless, you can see that this thing is, over time, we're going to see a bit of, of tokens enter, and we see ecosystem, who's controlling these tokens, community. These tokens right here are flatline, so I'm not sure why the community rewards, and then there's some for community, because really on the distribution that we saw, they're basically coupled up into one. And then the ecosystem, you guys know that I appreciate that. And then you have the seed, the Series A, and the team. So really, these 3 right here, in my opinion, are pretty much the same, because a lot of them basically come with the same mindset. They're investors, early investors, whether it be their time, money, any type of effort. Maybe they got even discounts, early discounts, and so on, because they're early investors and they get preferential treatment and so on and so forth. However, they obviously, we have a vesting schedule to protect the retail investor or the regular investor, so that as they get rewarded, as their tokens get unlocked, through the vesting schedule, they can't dump on the market. So we got to analyze this. Although this is something to be concerned about, we know that this is a very normal thing. And in fact, a healthy amount of early investment is actually good. And if what I've been saying in the last little while is that without early investors, without early liquidity, how you're going to get listed on exchanges? How are you going to make the proper purchases that you need, or the investments in marketing that you need to get this project going? But this is why they need a DAO, is because a DAO will kind of decentralize that authority. And you don't want to have a central authority in a crypto project, because you want it to be autonomous, basically a decentralized autonomous organization. So right now, this is an interesting thing. We do see a schedule here as a release, and you can see that the actual tokens, again, 50% go to the community, okay, which is half of them. What is that defined as? Okay, we'll look at that in a second. Early backers are early backer, and really early backer. Okay, so if you look at it, there's a significant amount of tokens that are early backers and early stakeholders, and then there's the research and development ecosystem, so to help with ecosystem growth. And I appreciate that significantly, guys. I've been putting emphasis on that on my deep dives in the last little while, given the fact that we need to see ecosystem growth in order to see true utility for the token. Who's going to use the token if there's no ecosystem or nothing to do on with the project or whatsoever? So I appreciate this. Now, the community, this is a lot of tokens, 50%, but remember, a good portion of these go to as rewards. I'm assuming that some of these could be used for, liquidity for exchanges. This is a big slice of the pie to just leave like this, okay, without a DAO. That's how I feel when I see this, okay? So let's move down, and you can see there's a little bit more detail. So you have the 50%. This includes airdrops, future incentives, and rewards provided to the node operators. Okay, that's about it. And even still, like, yeah, the airdrop scenario, incentives and rewards. Yeah, there's a lot here. Okay, there's a lot. There's 50% of them, which is good. At least it's for the community. And of course, if it's locked up into a contract, as far as rewards go, we don't have nothing to worry about. IO allocation to the IOG Foundation and core developers for research development, protocol maintenance. People need to eat. Let's be real. Programmers, developers, everybody needs to get paid. They got things to do. I get it. So this is a part of that. So research and development and ecosystem growth. We need that. We need that support in the back end. I get it. This is where things get a little bit hectic because, again, a lot of people in today's environment in crypto do not like to see early backers because the early backers equal VCs. Okay. And I'm going to show you a portion of the website when we get into the team is that there are a significant amount of VCs. The good news is that, this is not a lot, right? We're looking at about 30 something percent of the circulating supply of the supply is going to be allocated to these individuals. Okay. So members of the IONet team, first core contributors. And, if they did get a early discount, I would like to see that here. I don't see it here, so I can assume that they didn't, but most likely, they may have. So it would be nice to know. Let's see if there's any more documentation on that. I don't see it, so maybe it's not the case. Okay, so you can see that, this is the way it is. We're going to see tokens get released over time. So that's that. Then there's some restrictions that you might want to get aware of. Allocated investors are restricted for 3 years. Transfer restrictions are released from in 24 equal tranches at the end of the 13 months. So it's almost like a token unlock where you can see the investors are not able to get their liquidity that easily. It's going to be distributed over time, nice and easy, nice and slowly to avoid dilution. This is a healthy way to do things. I'll admit, although we do see a good port, like 30 something percent invested in early stakeholders, at least this is here to protect the retail investor from dilution. If you get what I mean, feel free to read this. It's very typical and standard. It's basically a dragged out vesting schedule that allows, again, early investors to get rewarded over time rather than all at once. And that's a very healthy thing. So we have staking capabilities. Do I dare click this? Let's look at the emission schedule and then we'll go back to the staking, because if I click this, I'm afraid that we'll leave this page. You can see that they try to explain the emissions. Every hour, you can see we get some tokens emitted, and over time it'll be definitely reduced over time. And again, 20 years, that's what it's going to take, 20 years to actually get that to happen. Feel free to read all of this mathematics. It does definitely help out with the the different stages and epochs that you can experience and so on. What's going on with the staking? If you want to learn about the IO staking on the on the network, this is good. The workers, the explorers, all of that is all here. There's a glossary and all of that. So feel free to check this out. We already kind of covered this. There's a lot of repetition, I would say, in a lot of the various different documents, but still very healthy. I found that this one was the best one out there to make things a little bit simple. Okay, so that's that. Now let's kind of retrace. Let's go back to the main website and just kind of like regroup here, because we did talk about a lot. We got basically wrapped our head around the majority of the value proposition here for the project, and for the most part we can say that it's pretty solid, guys. Like, it's providing deep GPU processing power to the market, and we know that there's a need for it. Given AI is one of the hot narratives, of course, AI requires a lot of deep GPU processing power. And of course, cloud-based gaming, which seems to be like the new trend, the new wave of gaming is going to be on the cloud. It's bound to happen. And if that were to be the case, how are we going to be rendering all of those high-quality graphics? Well, we're going to need GPUs and a lot of them. So in this case, they're trying to solve a real-world problem in a decentralized way. And you guys know that I support decentralization to the maximum. All right, so let's keep on going. Let's see what else we got. We did this already. We went through a bit of that. Compute network, faster the journey. Okay, to be honest, guys, I looked for a roadmap and I couldn't find a clear, decent roadmap. Unfortunately, it's not the case. However, they do give updates on X and so on, but a roadmap would be absolutely great. So that's that. Let's keep on moving down. Credible, backed by incredible investors. Okay, so this is good. So you remember the landing page, the first page that we landed on, it had Solana and it had Aptos, and it had a couple others that I'm not remembering at the current moment, but we see a few heavyweight logos here. Animoca Brands, they're not clickable. We got Aptos, not clickable. Solana Ventures. So what I'm assuming is that they consider Solana a partner because they basically they're VCs. They got some liquidity from them. They got some capital from them to run the project, and that could be the case. But if we kind of scroll through all of this, okay, if you scroll through all of this, just visually look at venture capital. Lots of venture capital everywhere, guys. The good news is it's not a lot. If you look at the token allocation, you can see that there's not a lot, but capital, ventures, lots of capital, ventures everywhere, capital. So this leaves a sour note for a lot of the retail investors of today, any investor for that matter. We've seen a lot of projects take huge losses, price basically falling significantly when we've seen a correlation with a lot of VCs involvement. And that's because blanket statement here is that VCs in general are only here for one thing. It's to make their gains, right? They make profit, they walk away. There's no real investment, or interest in technology per se. Of course, they may have that interest, but their main interest is the bottom line, which is making the profit. So if at any moment we see that the project does well, these guys are going to, try to sell their tokens to make the profit. Luckily, we have that, lockup periods and all of that, restrictions that we've read, obviously, to limit the amount of sell pressure. But they might hold till the top of the bull run and then sell all at once. And the reality is, this is what I'm getting to, is that if you think that this project and many others, I'm not labeling IO.net, I'm just talking about, altcoins and crypto in general, at the top of the bull run, guys, don't have a multi-cycle vision. Top of the bull run, expect a lot of these VCs to take a lot of profit because that's what they're here for, okay? That's what you should be. Consider yourself a VC as well. You want to get in, you want to make your gains, you want to lock in those gains and reaccumulate when we see a retracement. And that's will be the next bear market. We'll reaccumulate, we'll see how IO.net is doing and many other projects, whatever we feel that is the next narratives and hot projects to get involved in. But when you see a lot of VCs, we got to play at that, at that level. Okay, Sandbox, Animoca Brands, and let's scroll down a little bit more. We have Clarity, right? Angel investors. We have Solana, we have Aptos, we have Animoca Brands, we have Sandbox, a lot of major players in the space, getting all involved as angel investors. So backing and all of this, believing in the vision, and of course they come in with the checkbook. And that's the reality, okay? So you can do research on these investors, you can figure out who they are. They're all, individuals that are well known in the space, but if you're new to crypto, you might want to check that out. And you look at the advisors kind of, leave me a little bit baffled. Like, I'm not sure why a member of House of Lords of United Kingdom is an advisor. Like, okay, nothing against, Lord Ed, but I'm not sure what exactly he's providing or bringing to the table. Former ambassador of the United States to the People's Republic of China. I'm not sure what he's bringing to the table. And again, if you keep on reading their titles, there's nothing, maybe sports management, I don't know. But really, when I see this, it's like, what are they advising exactly? I would like to know. Like, is there, I don't see any real correlation with their description to what they're advising for in a crypto project. That's my take. Meet the team, different story. A very, very solid team, guys. Very solid team. Feel free to check. They have LinkedIn accounts. Feel free to check them out. Amazon, Binance. The list goes on. Like, there's a Capital One, obviously, for some finance, and X and Crypto.com. And there's a lot of good talent here. And of course, this is a good value proposition in itself. When we have heavyweights in the space that have been around and have the backing to basically put their money where their mouth is, I would say that's a very healthy thing. There are over 100 talented individuals. They do have some listed here, as you can see. And these are the main individuals, I would say. Tory Green being the co-founder, chief executive officer, and and co-founder here, Bassem, and so on and so forth. So again, you want to do that deep dive research into each individual team member and trying to figure out where they're coming from a professional perspective. Feel free to do that. But my quick move, scrape through their profiles. They're good. They're guys. We have a lot of talent in this project. So good stuff there. And that's about it. That concludes the team. Again, I couldn't find anything about the roadmap, unfortunately. Frequently asked questions. We got some here, Cloud 2.0. Rather, just some, how is it different from AWS? Obviously, it's decentralized, right? Decentralized model. So feel free to check this all out. I think it's a really good one. Place to kind of like begin some of that research. We talked about this. What's this right here? The Ether scan. The Sol scan. We do see that the tokens are somewhat distributed fairly. Like this right here, we know that this balance is coming from the tokens that need to get released, is that 300 million, right? That's something that we have to understand. Total of 800 million. These are the tokens that are currently in circulation, and in circulation based on that emission. So token distribution. So the token distribution is there. We can see that, holders, basically the 37% was that big wallet that we talked about. The rest of them are pretty much equally distributed amongst various channels: Binance, Bybit, Gate, and these are all liquidity. But if you look at the percentages, it's not that much. Okay, so we're doing okay here with regards to that. And this is locked liquidity, the 300 million tokens that are going to be used for rewards. So that's why this is so large. Okay, so that's that. And yeah, pretty much we covered the project pretty good, guys. It's a very interesting project, to be honest. I think that it has a lot of viable opportunity, given the fact that its market cap is small and it's competing in a very, very hot narrative in a space. All right, guys, I know you're here to talk about charts as well, and I'm going to give you this infographic. I'm going to post this on the socials. Feel free to join the Discord. I'm going to post this on the Discord as well if you want to read this in a little bit more detail. But generally speaking, guys, you can see that the as of today, more or less, because really I did this deep dive yesterday, finished up all the details, more or less at about $1.68, more or less. I know we've been getting a bit of a downturn in the last little while, but that's the name of the game. Market cap, you can see $159 million market cap, still very small, right? It's not necessarily a micro cap, right? But it's a small market cap. Trading volume, tons of trading volume, guys. You know what? The only reason why I think there's this much, and this is a lot, is because it's listed on many exchanges, right? And of course, Binance being one of them, lots of volume. And to be honest, a lot of people are buzzing about it. So it could be that, 39%, that's a significant amount of volume in comparison to its market cap. That's basically the metric here. Now, I'm hoping this is accurate, but regardless, this is what I got right on Coin Market Cap. Supply, and mind you, Coin Market Cap is a Binance project in itself, so it should be accurate. The supply, 95 million tokens are already in current circulation, which is only 11% of the maximum, right? Which means that there's a lot of tokens that still need to enter circulation, guys. This project is just getting started. And then, of course, when you start to look at that, you start to say, well, fully diluted, okay, it's fine at $1 billion fully diluted once we get all the tokens in circulation. But isn't maybe the current market cap is a little bit overvalued? Right? Because it's still very young and already at about $160 million market cap. So it seems pretty large, in my opinion, for being such a new and fresh project. And, and it could be that the market believes the same thing. This is why in the last little while, we have been seeing the price fall just a bit. We'll talk about the price action in a second. Okay, so let's move on to some of the details here. We have the ecosystem. They got the cloud, the worker, the explorer, the IOG, the ID, ecosystem, solid. Everything you need to get involved into the deep in narrative. If you want to get into the project, you've got a lot of options here for rewards and getting involved and so on. I appreciate it, but I would love to see the ecosystem have a DAO. And that goes down to also the utility of the token, right? If the utility of the token should have a DAO as well, but it does have rewards, burning, staking, and currency, like a currency, being able to use it as a payment system for payment for the services itself. So pretty interesting here. I give it 9 out of 10, but of course the utility needs one aspect of a DAO. We need to be able to use it. So either I dock it on the ecosystem or dock it on the utility, but I feel the utility would be a lot more necessary in this case to give the token that utility for voting privileges. Roadmap, no roadmap to be found, guys. Again, if the team wants to make things easy and to bring confidence into the retail investor, we shouldn't have to dig for days for a roadmap or for any information for that matter. Anything that is provided should be in the mindset of less friction from a retail investor perspective. And in this case, relying on updates on X is not acceptable. It's not acceptable to be able to have to scrape through and dig and search through X posts to get updates as to the partnerships and what's happening and all that. That is not what the retail investor needs. More confusion and more ambiguity. So if the team wants to make that easier, create a blog section or get on Medium and get somebody to write about the partnerships so that they're clear and understood and so on, and where they're going with these partnerships, where they're going with the next phases of the project. There's no roadmap, and if there is, please let me know in the comment section below where I can find one, because I tried to look for it. It could be me that I couldn't find it, but that means that if I couldn't find it, there's a good chance that a lot of people couldn't as well. So the team is fully doxed, lots of crypto experience. Advisors are a bit disconnected in the sense, I'm not sure where the advisors are coming from. They don't have much to do with, technology or blockchain or crypto of any sort. So I'm a little bit, confused about that. Angel investors, Solana, Aptos, Animoca Brands, and Sandbox. We have VCs all over the place. However, the team is solid, right? This is the thing here, guys. We have a solid team. We understand that sometimes we do need some capital and liquidity to make the project work. So this is why they got some angel investors. But again, we have some tokenomics that definitely support it. We have the socials, the followers. They have 516,000 subscribers on X, which is good. No doubt. However, they've been coming down for the last 30 days. For the last little while, and they have been coming down. And basically, they've been down 159% in the last 30 days in comparison to the last 30 days, pretty much. So the issue here is that they're losing a bit of momentum, right? So that's not a good look. But, however, the rest of the crypto space is pretty much in the same boat. It's not like they're the only ones. We also have the tokenomics. Pretty interesting here. And this is why I give it a 5 out of 10, by the way. Their posts are also coming down 65%. They're losing momentum. Okay, so that's that. Tokenomics, a fixed maximum supply. We talked about that already. Hourly rewards basically for suppliers and stakers, 300 million hourly for 20 years, and a burning mechanism. That's great. 9 out of 10, obviously, for tokenomics. And then partnership, they have Filecoin, Rendered, and Aether. Many VC relationships that we've already talked about. So that's the VCs keep things a little bit, ambiguous. And obviously the lack of information and detail with regards to these partnerships. Filecoin is a little bit more. We have to rely on a third-party blog post from somebody to kind of get some information. But, we need a little bit more info here. So give it another 9 out of 10. Exchanges, tons of exchanges and many, many more that I have listed here. However, one is missing, obviously, Coinbase. And that's why I give it a 9 out of 10, because really we're just missing Coinbase. Coinbase could bring a lot more volume, and we talked about the volume already. And essentially the volume, as we saw, is basically showing us that, there's already a ton of volume. Imagine having Coinbase all involved. Okay, so let's take a look at what's happening here with regards to the overall summary here. As far as my verdict, we can see that it's part of the Solana ecosystem, a very hot ecosystem, cheaper, faster, and everything that we're looking for the next generation, of blockchain, obviously. But there's a lot of competition nowadays. We just got to understand that layer one, there's a ton of layer ones coming out. It is part of the DeepIn narrative, a very hot narrative, supporting narratives such as gaming and AI. Of course, DeepIn is a necessity to solve a real world problem. A software solution that solves a problem is generally going to be successful. We looked at the token distribution, 50% to the community, 16% to research and development and ecosystem growth, of course, and 34% allocated to early stakeholders, including seed rounds and all of that, and team members and all of this. So this is something that we got to consider. It's not too bad, but we got to understand there's a bit of risk here for dilution, but not with a strong vesting schedule, as we talked about already. No implementation of a DAO or for governance. That's unfortunate. I would like to see a lot of this, especially the 16%, and perhaps even some of the 34%, being governed by DAO and how that works, right? So that would be good for decentralizing the organization itself. Getting a hold of the team on the Discord is borderline impossible, guys. I tried for about a week to get a hold of somebody and no responses. Obviously DMing and tagging and doing this and doing that, trying to get some solid answers from people sometimes is impossible and unfortunate, because with such a young project, they should realize that engagement with the community is super, super important. And a yes or no answer sometimes is enough. And, if there's not enough human resources or human power to get on there and just respond to some questions, then there's a bit of an issue, especially during a downturn of a market where we know right now there's not a lot of volume really in this market. So that's a bit of an issue. Official information about partnerships should be provided, as I mentioned many times. That is definitely the case. They need to take some time to make that communication available. What else do we have? The final target. Really, if it can compete with Render. And Render's a beast. And we know Render's already developed, already matured. It started off as a very deep-in project early on. I'm an early investor in Render. I got in on Render very, very young. And doing the research on Render gives me the indication and gives me some clarification as to what I should be expecting in projects within the deep-in narrative. And I see IONet doing a great job, basically tackling things that Render doesn't really have per se, which is the complete decentralization of things. However, like I mentioned, the DAO will take it to the next level. And if it can compete with Render and reach its market cap, not exceed it at the current moment, because we know that we're waiting for a bull run to bring more capital into this market. And once that happens, we'll see a lot more capital. And of course, we'll see Render grow up and we'll see IONet go up. The thing is that we're going to use the current status of Render at its current rate at about, getting to about, $20, definitely a 12x. That's very, very possible for IONet. And, I can see that definitely happening, but it's already at that level, keeping up with one of the major heavyweights. So right around $20 for me would be a great target to see IONet. I still feel, based on where it's at in this market, it could come, its market cap is a little bit large, and it would be nice to see this do a lot more. But in order for that to happen, we need opportunities at lower levels. And it could be possible that happens before we see IONet really run up. I give it an 8 out of 10 because it's got everything that we need to get fundamentally bullish. There's a few little things that need to be added, but ultimately fairly decent. All right, guys, I know you're here to talk about charts as well, so let's begin. Let's take a look at the chart, because ultimately the chart has been falling, unfortunately. And the last time I covered it on the live stream, guys, by the way, feel free to join me live. I do talk about lots of different coins, and IONet was definitely one of them. And the analysis was, look, there's not much data. The reality is we're coming down for lower lows and lower highs, and until we change the direction, that change a character in the price action, we can't really make any moves. And currently we don't see so much bullishness, in fact, here on the IONet price chart. Let's take a look at this in a little bit more detail. You can see that as we made that lower low, we actually back tested that lower low for a confirmation. Right? We actually backtested and used the previous support as resistance, and basically got rejected at $1.92, coming down to lower levels is perhaps what's going to happen here, coming down for another lower low, unfortunately. The only thing that we can kind of hinge upon is this, the fact that we're already oversold, and the bottom is likely to come in very soon. Right? But the only way we can get, confirmation of that is if we see the price structure change. We need a change of character right now. All we're doing is making lower lows and lower highs, unfortunately. Now, if we create a nice double bottom, and obviously the daily is going to be very, very hard to trade. So let's get down to the 4 hour. We can get a signal on the 4 hour time frame. We want a sense of a bottom down here. We want a sense of a double bottom with bullish divergence. We already got oversold. We got a bit of follow through. We come down from the chop zone, maybe come down for a double bottom, a lower low, maybe in a higher low. That might give us some interest for an accumulation. But really what we need to see is a structure. We need to see something down here. Let me make this a bit smaller. We need to see some sort of inverse head and shoulder, cup and handle, W formation, Adam and Eve pattern, something into this level that could allow us to put a stop loss underneath and then accumulate, right? That's basically what we want, because as of now, we don't have enough data. We have 1 point, we have one bottom, and we're working at another bottom. That's only 2 touches. That's only pretty much one touch up here with 2 touches with a confirmation. We want something in this level to give us some sort of signal that maybe we're looking for a reversal, right? That's that. Bullish divergence, that's what we need. We need something, but who knows how much lower we're going to go here, guys. This is why I say, if the trend is your friend, at this point, it's coming down further. It got rejected right here, not a good look. It got rejected on the previous low. low, not a good look. And then we come down, let's wait for the structure, and then we can deploy. As of now, you're taking a lot of risk in my opinion. Of course, I'm not trying to spread FUD here. I'm just trying to show us what the price is saying. The price is saying there's no clear sign that the bears are showing weakness here, and it could be that we keep on coming down for lower lows. Now, again, we could go sideways, which is healthy for that structure. But until then, I'm going to have to, keep risk management totally intact and keep it, at the forefront, because we don't want to lose any capital here. We want to be able to deploy as much capital at the bottom of the range to accumulate as much as we can when we get the best price possible. Let the charts come to you. Let the trade come to you. As soon as we see a nice bottom, I'll keep you guys posted. Right now, there's nothing else to be said, guys. We're still waiting for the market to get its major reversal to the upside. All right, guys, if I've offered you any value in this video, do the channel a massive, massive favor. Slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description below. Feel free to join the Discord, guys. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. And if you want to vote on my next deep dive next week, feel free to join and vote on the next project you want me to cover. All right, guys, take care. Have a good one. And don't forget, buy the dip.